Got an FT on the NQ. Got a stop limit order that got picked up. All right. So I ended up, because it was an FT and things are moving really fast, I ended up pulling my stop up and ended up getting out with a +4. Sorry, I'm trading and talking at the same time. Sometimes this gets kind of, and updating my trade log in real time. So uh, sometimes it's gets a little busy for me back here. I'm going to buy this YM here if it opens right about where it is. All right. Yeehaw. You better be fast. Yep. Now that's capital preservation at work there, folks. You go click, ka-ching. All right, so let's go over this, Dig. We've got see the momentum building, the lighter color, the hard push. All right, see that's exhaustion. That's potential for exhaustion. See the oversold condition. So we have those two in place. See, we have the speed tick. We have the major line of support that it slammed into, tested the other side, sure, and then pulled back and opened. So there was one potential buy here. If you didn't buy it on that bar, you could have bought it on this bar. I didn't buy it on this bar um, because the pullback was pretty substantial here, and I was trading this other trade down here. So I got in on this one at the open of this bar and straight to target. And a whole bunch of confluence here suggesting this little pullback that we got here. Now, I was very busy, but some others took this speed Mac right here on the CL. Perfect example here. Speed tick, oversold, low of the day, which is minor support. A McDiver, which is divergence, bar open, and off it went. Lots of good opportunities there. But look what's happening here. See how it gets right down there to the line and then stops? This is the exhaustion. This is the confirmation that that line may just be too much to push across. So I just put on a buy. And I'm out. Capital preservation, baby. All right. So we just talked about this one and how price came down, slammed into this line, bounced, and then off it went again. See, okay, so here's the point that I have when people ask me, do you ever put on runners or have trailing stops, whatever? You're certainly able to if you're anticipating a reversal. I have no expectation price is going to reverse. I have an expectation that it's going to pull back or retrace a little bit before it continues on its way, whichever way that is. That's my sweet spot right there, which is what I was counting on. And then, sure enough, watch, price drops again down to our next line, our next level. It moves a long way in a short period of time, slams into this level, does not have the energy to get across it. We got a speed tick, momentum, an oversold condition, and then a pullback alert suggesting that the type of volume inside this is the kind of volume where sellers were well in charge of this bar initially, and then as it price got lower, the buyers started taking over. That's what this little dot tells us. Then we had our relative speed at which the orders were coming through relative to on these prior bars. That the speed was a lot faster, kind of like a drag racer. And then at the open of this next bar, we had support behind us. So there's our order. And I think all of us were in and out of that trade in just a few seconds, which means we were practicing our capital preservation. We're in and out of the markets and safe now. We're safe. Now, do I want to put on a runner? Do I want to have a trailing stop following this? You could try. This may be a reversal. I have no reason to believe that it is. May or may not be. I'd rather hard target, put the money in the bank, and be done. I'm safe now.